morning. Welcome to Trading with Larry. I'm Eric Shamilov. Unfortunately, Larry can't make it this morning. I'm joined by his right-hand man, Clint Brewer. Good morning, Clint. How are you?
Good. How are you doing? It's good to be back on. It's been a while.
It's been a while, and thank you for joining. What an interesting start to FOMC Wednesday. Uh, Larry and I have been talking a lot about the dollar and gold and silver, a lot, right? And we've been discussing the the effect of uh, traditional factors for gold returns and how gold doesn't really care about anything anymore. Well, we saw a little bit of how gold definitely cares about the dollar yesterday and into last night. I mean, gold unbelievably up another almost 4% on the day. I mean, a lot of that was from the overnight future session, but the dollar's been really weak. I think a lot of that has been the result of the market pricing in a potential intervention in Japan to boost up the yen, and it looks like maybe they're not going to need to do it because the market might have done that for them. So the dollar's at a 4-year low at this point, and we're seeing metals just leg up again. Gold hit 5,300 an ounce overnight. It's pared back some of that. So on top of that, you have ASML reporting, the Dutch uh, maker of lithography, which is basically they make the machines that make the chips, right? So they're reporting a lot of demand. Stock markets were up on that. So this is how we start FOMC Wednesday. Another crazy. It's going to be another crazy day. It's already crazy if you're in the metals market. And my question to you is, with earnings from ASML out, you can see the Nasdaq's already up 80 basis points on the move. Uh, did that steal any kind of thunder, you think, from what the Fed might come out with today?
No, I think your eyes need to be glued on the Fed 100% as a catalyst, and I think to one extent, like you know, Powell's in a lame duck session, so to speak. I mean, the Fed's not going to cut rates today. I just looked at the odds. I mean, it's a 97% chance that they hold rates steady as expected. Last time I checked in odds, there's two cuts expected in total this year, but we'll see how that evolves when a new Fed chair is supposed to come into office in May. So have all that in the back of your mind as all this is going on today, because how much weight will Powell's words actually carry? Especially during the press conference. How much will his forward guidance really impact the market, with the market knowing that he's just simply not going to be here and at that position a few months. So have that in the back of your mind. But I expect the Fed could come out and he's going to try to be pretty hawkish, in my opinion, just because you haven't really seen this collapse in the labor market like they were fearing. You've got inflation still been holding around this 3% level. But if I'm the Fed, all the things that are like the feedstock into inflation are moving the wrong way right now. Whether you want to say gold and silver's sending out a warning on that, but more specifically, I mean the moves that we've had in base metals. You look at copper. You look at what's happening in oil now. Oil was one thing that was definitely helping keep a lid on headline inflation. Oil has been rallying, continues to do so now with Iran in the headlines. I think the geopolitical risk was significantly underpriced for oil. So all these areas that are really sensitive to inflation, but then the dollar as well. I mean, a falling U.S. dollar index is bullish for financial conditions. It helps keep financial conditions loose. So why does the Fed need to come in and cut rates when conditions are already loose? And this drop in the dollar you're seeing is making them looser still. And not to mention, a falling dollar is inflationary. All right, so you're boosting the cost of to import goods. So all those things taken together, I think I think the Fed tries to be hawkish in their tone. We'll see, again, how much weight the market puts in it. But the other thing I would go to, and I just want to talk about this really quick. We're writing this up in Larry's e-letter for tomorrow. And trading with Larry, it's free to sign up if you want to check it out. But everyone's trying to call the top in the dollar and silver here, right? I don't necessarily want to call for the ultimate top, but I definitely think you have the conditions in place to see a pretty meaningful reversal and a larger retracement than what we've seen. And I think the dollar could be the spark for that. I would argue the dollar has been a key catalyst for this most recent move. As you noted, I mean, I think the dollar index is at the lowest level in, call it, 4 years or so, but we're right back at a key level, and just all the conditions are in place to see a reversal in the other direction. And if you get that, I think that can be the catalyst to finally take some wind out of this gold and silver trade. So here's a level. I've got the dollar. This is the U.S. dollar index chart, and the level I would watch is right around this $96 area. So this U.S. dollar index, tracks the dollar against a basket of other currencies. Notably, it's going to be, the big ones: euro, yen, pound. And dollar was in free fall during the first half of 2025. And once we got down to this 96 level, this was at the start of July, just started grinding sideways, tested that level once more. And then where we've had this really big move in gold and silver has been since mid-January. The dollar's been in free fall. And then you had President Trump come out yesterday and make this comment about how the dollar is doing great, which was, a pretty incredible thing to hear him say with what the dollar has been doing. Which,
Oh, well, he's always going to say something like that,
well,
right?
it just he talks
Doing
about
great, doing great.
he can yeah doing great, yeah. So the dollar's doing great. You can talk about wanting a strong dollar, but the dollar's been in free fall. We're at the lowest level in over a year now. I think you have the conditions in place to see at least a rebound. I'm not saying the dollar's found its ultimate low right here, but you're coming back to test this area again. You've got the dollar DXY is pretty well extended below the 50-day moving average. You got the RSI is just pretty much absolutely buried right now. So when you have those conditions along with this key price level, that's something that I think you can keep an eye on. And if we do see, and so this is all happening. It's really interesting. This is happening as you've got the Fed today too. So you have that potential Fed catalyst as well. So that's what I would keep an eye on today. I would watch the dollar index, and if you see a pretty hard bounce in the dollar index, I think that that would knock that would be the catalyst to knock the gold and silver trade here right now, and take at least retrace some of what we've seen so far this year.
Yeah, I'll go over some forex charts. But what's interesting is in a little bit. But what's interesting is the dollar's actually up from the lows uh, from yesterday's lows today. The dollar index is up. So my question is this, and I don't know if it's a kind of a dead cat bounce kind of situation or not, but um, I I 100% agree with everything you said about the inflation thing. I don't At this point I don't actually see oil dropping below 60 or back to the lower 50s anytime soon. I think the forward curve now supports that, which which probably means there's a little bit more than just geopolitical premium in there. But you talk about geopolitical premium, and you talk about factors like that. I mean, gold's got pretty much all that stuff working for it: geopolitical premium, the dollar weakness, the momentum. Larry would add all of retail is in it, which I actually think is actually bullish because they tend to send stuff up to the stratosphere in the short term. So, yeah, the CRB commodity index this year, as we speak, is up almost 6.5%. Um, and what's been happening recently, I'm going to share this chart here of the 30-year yield against the 30-year break-even inflation rate. Take a look at that break-even inflation rate, bottom panel, and you have your 30-year Treasury yield here on top. It's been pretty flat uh, over the last month, top panel, but what you do see is a nice uptrend now in the break-even inflation rate. And so, maybe the tips market is starting to, look at commodities and kind of react to that a little bit. So, yeah, today's comments are going to be very interesting. The only way I see the Fed potentially cutting is for the same reason that they cut last year, which was I think they were concerned about the jobs market. And, our last reading of the unemployment rate was 4.6%, I believe it was. So I think the long term average is higher, much higher than that. So there is room for the upside. So that's the only real thing that I see that would get the Fed dovish. So yeah, you may be right on that, and it's going to be interesting to see whether the market gives it up if he does become hawkish here. So I'm just looking at the dollar. So he said yesterday he's okay with it, right? The dollar's great, and he's okay with a weaker dollar right now. But what could he actually do to control that? I mean, there's fiscal policy that he can control, cut deficits and stuff. But wasn't that like what he was campaigning on with tariffs and all this tariff revenue was going to cut the deficit? And wouldn't all of that have been net positive for the dollar? So I'm kind of like, okay, well, here we are, and I'm looking at a euro long term chart. You look at a euro chart, I mean, it's been. I should pull that up as I look for it, but I mean, in the least, I think Forex volatility is back. Right? What do you think?
I would 100% agree, and we actually put on, I think it was our first trade of this year in Currency Wizard by taking a short position against the euro relative to the dollar. So we're positioning for that reversal higher in the dollar. Um,
Yeah,
yeah,
that's that would be a big counter trend trade, right?
it would be, but like I said, I mean everything that I was breaking down a second ago with the dollar. I mean that's those are the things to keep an eye on. And the other thing, I mean, I didn't say it explicitly, but a hawkish Fed should be bullish for the dollar. If Trump if Trump's concerned about dollar downside and he wants to support the dollar, he should be screaming at the Fed to raise interest rates. I mean, that's that's how you get a stronger dollar. But no, I think my play today on the Fed is I think they're going to come out and try to be hawkish. I think you mentioned it, but I think the price action in the dollar is already starting to signal something. The fact that I mean, we had a huge for a currency. I mean, look, the dollar, U.S. dollar is not a meme stock. The dollar dropped yesterday following Trump's comments to agree that you don't really see a lot, and it quickly reversed that decline. And I think whenever you have a failed, and it happened at that key level. So if you're looking at the dollar index, it happened at 96 level. So when you should really, really pay attention to when you have call it a failed move. If you have a really important chart level and you have a break below or a break above, and it quickly reverses that's sending a signal. That could be telling you something. And so you don't want to trade on that alone. You want to take it with the weight of the evidence of what other things that are happening. But I thought that was a really important event yesterday following Trump's comments, the fact that we're at that level. And now you've got this Fed catalyst today, and everyone's super bullish on metals, and gold and silver can do nothing but go up. It feels like everything is in place right there for a reversal, a more significant reversal than what we've seen in some of the day-to-day volatility. But I think you're right on the currency markets. I think currency market volatility started to come back last year, especially in the first half as the trade war got underway, and then it disappeared. And now I think we're going to be right back at it again.
Yeah, I have a feeling the currency wizard, your currency product with Larry, is going to get quite busy this year. I would, I would be. I think you guys need to put out like tons of trades there because I think it's going to get really active. Look at this long term chart on the euro. Very simple, just very simple price chart. I mean, this is going back to 2016. That's I mean that kind of screams breakout to me. So I think, and we're right at that trend line. This is a year. This is years in the making. So I don't know. It's. I think everybody needs to be watching currencies here, and it's a thing where I think a lot of people are throwing out conspiracy theories as well, and kind of a misunderstanding of you're hearing reports of central banks de-dollarizing and they have a lower percentage and stuff like that. I think a lot of people aren't really accounting for the percentage naturally going down because gold prices have come up so much. So when these agencies report and when central banks report their reserves, they're reporting their gold reserves, which are 100% higher at this point, maybe even more so. So I think there's a little bit of a misunderstanding, but I do see a trend in that direction. So I don't know. Just looking at the euro's long-term chart is kind of making me think: Are we potentially entering some sort of regime shift, and we don't even know we're in it? I already think that this year is all about a macroeconomic regime shift, and the currency market. Just because I think this is going to be a year of just crazy geopolitical headlines, and we already had it so far. I think it's the start. But what do you make of that? Do you think the world is de-dollarizing? Should people be worried about this?
I mean, yeah, the world is de-dollarizing. I mean, you can see the trend in the long term charts. I don't think I have this one available to pull up, but I mean, it just has the longer term what the dollar is as a percent of central bank reserves. And like you said, there's a natural shift that's happening because of the dollar's decline against other currencies and gold's bump. But it's nothing. I guess there's two things with it. One is that yeah, there's a shift happening, but the other thing is, if I'm trying to recall the chart, if I recall the chart correctly, it has the dollar reserves back to where it was, the percent levels back to where it was heading into '08 or something like that. So I guess what I would say is the decline in dollar reserves is not unprecedented, but it's definitely something that has weighed on the dollar over the last year. Especially first half of 2025. Now we've just been grinding sideways for the last 6-7 months now, and the dollar's back near the lows again as we were just showing. But yeah, I think you talk about a macroeconomic regime. Yeah, I think there's going to be a seismic shift this year, and I think a lot of it, if we talk about short-term dollar trends, but if you do see the dollar eventually pull back more, make new lows, if you see that euro chart you're showing hold a breakout, that has big implications for a lot of other markets. And the one that I don't think anyone's really talking about, you touched on it briefly, but is broader commodity indexes. If you look at the CRB, you can look at the S&P GSCI. There's an ETF if you want to track and trade it. DBC is the ticker. And I'll see if I can pull up a chart of DBC really quick. But this is for
Deutsche Bank commodity index.
it's a commodity index fund. Well, so one word of caution to everyone watching: if you're looking to trade these things, a lot of them are structured as a partnership, and they'll come with a K1 during tax time. So be aware of that. Also means that you might not get a tax advantage status in these ETFs if you hold it inside a retirement account. So just something to look into. And
I would add another word of caution for these kinds of commodity ETFs. You got to really look at the weightings. A lot of them are just closet energy ETFs. They'll have like 50, 60% energy. So just be careful with that. Go ahead, Clint.
Yeah, so that's a good point. Yeah, you want to check the weights. A lot of these broad commodity ETFs are heavily weighted in oil or oil derivatives like gasoline. But here's the level to watch for this DBC fund. We're coming up to breaking out a fairly key level, and this is what if this is a weekly chart, goes back 5 years. If this holds and starts to build on the upside, this is very significant for the inflation picture. If you come back, because if you come back to this period back here, this was 2020 into mid 2022. This peak was June of 2022. This is when CPI inflation peaked out at 9%. Headline inflation peaked out at 9%. So this is a major driver of headline inflation, and the fact that we're starting to poke above this level, I think is something that you need to watch carefully, because if there's one risk, especially for stock market investors, if there's one bigger picture risk to the rally this year, it's if the Fed is forced to, abandon this dovish stance and get more hawkish on inflation, and that because that removes a major tailwind at a time when valuation multiples are already stretched. So I think, in my opinion, of everything that's going on in the world right now, this right here is the most underappreciated, underwatched chart that could really throw everyone through a loop later in the year.
Yeah, I love that chart because I have basically the same chart, but with the CRB commodity index. And what I will mention, so they look exactly the same, right? And I would say that recent, would you say it's breaking out? Is that your assessment there?
I would say it's not a clean breakout of some upcoming levels yet, but it's trending in that direction.
Yeah. So last year it was trending up all year, and I think it was all because of gold, right? Gold and silver. We could say that. And you mentioned before, it's crude hasn't been participating in that. If crude now joins the party, right, and you see natural gas join the party, and all these other commodities, yeah, you could have a good old fashioned breakout. But I just go back to Trump's comments. Like, what is it that he can actually like? The reporter's question to him, I think, was like as a trader, as a finance person, I'm just listening to the question. Like, are you okay with the weak dollar? Like, what is the president of a democratic nation supposed to do? Uh, I mean, that's. Do you think that's all market forces? I mean, what is it that he can actually do to control that? I don't know. Maybe that's why the dollar is creeping up from yesterday's lows. The chat is asking about what levels I see for today, and I replied in the chat. I just want to reiterate. So the way that I break this down is you have days where big macro forces are going to be at play, and then you have days where it's just noise. So going into the day, I think that's what everybody needs to think about first. Is this a macro day or is this not? Today is a macro day. Would you agree today would be classified under the realm of macro?
Today,
Where
today is a very big macro day.
exactly. So on days like that, macro has the ability to destroy the straddle. Uh, of course, we've seen macro days where everyone's looking for a big move and we get nothing, right? But that's how I kind of so like going. So my the way that I trade going into a day like this is I don't make the assessment right at the open. Like past few days, you guys have been asking me. I've been able to kind of confidently give you some levels based on some stuff that I was seeing. So like yesterday, for instance, I would say for the market, we had all the ingredients for what I like to call that iron condor kind of day. You had a mixtape. Volatility wasn't doing anything, especially after we came off a big day on Monday where the market retraced that entire gap down. Um, the market was gapped down about 1% Sunday night futures. That came back. So from low to the peak in futures, you had a huge move. And then yesterday was sandwiched in between that big move and today's Fed meeting. So, and a bunch of earnings reports coming up today. You're not getting, plus you had the mixtape. So all the ingredients for like a range that you can kind of uh, rely on were there. Today, I just don't see it. Like even though the straddle is only at 30. I mean, Larry likes to say it's a 30-point straddle on a $7,000 product. So, right? I mean, he's right.
Did you trade yesterday? Did you do anything yesterday?
I got crushed in silver yesterday.
Well,
For,
just on anything on the S&P 500.
yeah, yeah. I did the. I was doing iron condors all day.
We came in, and I mean, yesterday was the worst in terms of how the premiums have just looked. I mean, we came in yesterday at the open, and you could only, we were looking at, I was looking at a bear call spread, and I mean, you could only get a dollar going up 25 points, which I mean that's the lowest I've seen it all year. Larry talked about it yesterday, I
You
think.
repeat that? I didn't hear what you just said.
That you to go. So if you want to look at it like a call spread 25 points higher, and we go about 15 points wide on these things, that you were only getting a dollar for to put that on, and that is by far, that's been the lowest level that I've seen all year easily. Larry just makes a comment. I
Yeah.
mean that and this is why, especially if you're following along an S&P trader, trades have slowed to a trickle, so far this year, and it's just because yesterday was a great example. You're not getting compensated to take on risk. I mean, to go out 25, to look out 25 points, and you're only going to get a dollar. I mean, there's nothing there. And like Larry, it's where you guys differ, Larry. We like to go directional at the open instead of the condors.
Well, look, sometimes I do that, and I'll say how I do it. But first, so yesterday, yeah, the premiums were extremely low. But at the open, where S&P was up 30 points yesterday, right? From the open. At the open, you were able to get not much, but that was the only real time where you could have gotten premium was if you pulled the trigger right at the open. You're right. And the 85 level on the upside held, and the downside held. It was just a pretty tight range, I would say. So I don't know. When volatility is low like this, you talk about directional stuff. What I like to do, I hate selling out of the money, where you're not getting compensated for premium. But what I will do, if you get a directional read, you have situations in the market intraday in the SPX where, like let's say the market is right now at 69.80, okay, and it's like I don't know, noon, okay, and you look at the board and just 10 points out, you price in like a 15-point spread. You guys like to do. I like to do 10-point spreads. You price that in, and it's already trading almost at a max loss, just 10 points away. So what I like to do is actually sell in the money call spreads or put spreads, depending on the situation, where just a small move, I'm talking about just like maybe 7 points in your direction. That's it. And you'll pick up like $3 in premium on a spread that's already trading almost at max loss. your risk is very small on that. But that's how you get the reward when the premium is so low.
So, what do you think about levels today? Then is this 7,000 level's got to be a magnet on the upside. It feels like.
Yeah, 100%. Let's see where 7,000s are. I mean, that's where most of the open interest on SPX calls is for today. I'm lying. No, most of the open interest is at 70-60 for today, but around the vicinity of where we're going to open up, that's the level of interest, 7,000. Um, I don't know if we're going to hit that. I think that this ASML earnings report may have stolen some of the thunder a little bit to the upside. But I don't know. Like everybody's thinking he's going to come out hawkish. I see that. What if he doesn't? All right. What if he doesn't? Then we may blow right past that. So
Well, that's why I say I don't know. He can try to be hawkish, but I don't know if the market will care because he won't be in that role in a few months anyway. And the pressure's on to whoever does come in to significantly cut rates. This. I mean, this is another thing that I think is going to spark a lot of volatility, especially later this year. Whether it's currency, stocks, metals, and so on, is that market forces are going to collide with central bank forces. The pressure is going to be on the Fed to stay dovish and to cut rates. And if we continue to see commodities do what they're doing, the inflation pressures are going to really intensify, and you're going to have a lot. There's going to be this disconnect between what Trump wants the Fed to do and what the market wants them to do. Which keep an eye on what's happening in the bond market as well, because I think you're going to get a lot of volatility spill over into rates.
you talk about levels. So I'll share my ES chart with you since we're talking about levels, and let me walk you guys through this. So two key levels that I see, these two red lines. These are points of control on the volume profile, and so I have two volume profiles here. You have this big white one, which is measuring all the volume slash price. So the reason I love the volume profile, I don't think price by itself is important, and I don't think volume by itself is important. You got to kind of look at them together. It's like it's like space time. It's not really space or time. It's space time. It's a weird kind of thing. But anyway, so this big white blob here, this is the volume and price for this entire move. So the point of control there, that's where most of the volume was traded. And you can see it's been a pivot point. And I'm going to rewind this back. It's been a pivot point like for a while, like right around that level. I'm just rewinding it back, and it's just 69.50. Right? That's 69.50. That's 70 points lower from here. So that's been a support for a while now, for more than a month, and that makes that level extremely important. You can see how it's pivoting below it, and so this is an obvious magnet for me right now. The other point of control is this whole move from yesterday's low in the future session to to the high of last night. And that's a bit higher. That's at 69.89. That's 30 points out. Would not be surprised if we test that level. Maybe uncoincidentally, the straddle right now is trading at 30. This red line, which is a short-term point of control, is exactly 30 points out, right? So where'd that chart go? I'll pull it back up.
And just one thing to note about that chart too. You mentioned that was ES, so that's the S&P 500 E mini, and so those levels don't necessarily line up exactly with where cash is
No,
going to be at.
no. But
Just
I
for
use
everyone watching, like you don't take these levels and the levels you're talking about on here and throw them on top of a chart of the S&P 500 cash index.
No, no, you do not. No, you do not. But like, let's say the S&P opens up, just argument's sake, at 7,000, right? And you're looking at, a 30-point lower support level on this point of control here. So that would equate to, 69.70. You could look at that level as a spot where you want to start pricing stuff in potentially. So, but yeah, thank you for mentioning that. I'm sure people are a little bit confused by that. Um, so as I was saying, uncoincidentally, non-coincidentally, however you say it, 30 points down, that's exactly the straddle. And so what I like to do is, we're at an all-time high. There are no levels up here to think about, right? So you start looking at what the option market is telling you. So again, 30 points to the upside, we're at 70.20. I'm going to put a line right at 70.50 right here. So let me put that red line up there. So based on where the straddle is currently priced, the option market is saying we're going to have this kind of range today, which is very tight on Fed day.
Yeah.
So that's where I would be looking. So like S&P 500 is going to, let's say it opens up right here. ES futures are up 10. So we're talking about 69.90 around there for the open. 30 points out, 70-20 calls are trading at 370 and 69.60 puts are trading at 650. So, you know, the market feels bullish, right? But for some reason, the puts are more than two times what the calls are 30 points out. So, I guess one of the reasons I'm going to pull up some volatility metrics on the S&P 500, and that's actually like the fact that 30 points out on the puts is so much higher than 30 points out on the calls, even though we're we're feeling very bullish lately. Um, I would say you look at the spread, what's known as the skew. You know, I'm looking at 90% out of the money and 110% out of the money on the calls. And this green line right here, that's the spread between those far out of the money puts on S&P and far out of the money calls. We are way off our lows on that spread. So, implied volatility is at a level where I think forward returns in the market aren't that great. And all of this month, even though like the index is at an all-time high, uh, traders are hedging something. They're definitely afraid of something. And so that's why you see skew up like this off the
So
low.
explain. Can you explain that skew index just a little bit more and how what that's measuring and how you would use that to just kind of inform your day to day?
Um, well, this is not an inch. So if I was gonna look at this for an intraday trading decision, I would look at intraday changes in the skew. This is not intraday. And Bloomberg doesn't have that. It's a very that that would be much more robust data. You have to pay up for that, but that's what I look at. I look at things like this, but on an intraday level. Like these are daily levels. But what this is telling me, what basically this is, it's a very simple index. It's measuring the implied vol of puts 10% lower and implied vol of calls 10% higher. And it's taking that spread, and if that spread is going up, that means puts are getting bid much more than the calls on the tails, on the tail end of
So Pete, there's more demand to hedge on a tail risk move.
exactly, exactly. That's exactly what that means. So this is kind of what I'm looking at, and again, 30 69 60 puts are at 650. Uh, you know, It's going to be an interesting day. I'll leave it. I'll leave it there, just based on that. Look, usually puts are gonna trade higher than calls. That's a natural
Yeah.
thing. So what you want to look for is how much higher, how much lower. You know?
Yeah, I assume we'll look at levels at the open, but there's just we like to try to pick a direction to put a trade on, and with that event happening at 2 o'clock, there's a lot of we don't trade a lot heading into FOMC day. We might look at how things are trending, immediately after the release. The
Mhm.
added wrinkle you have to that now over the last several years is his press conference, which can so you gotta watch. You can watch the reaction to the reaction, so to speak. It's like you got the knee jerk reaction to the statement when it comes out. Any reversals that occur off of that, but then you have to contend with any comments Powell's going to make as well. And I think it'd also be interesting to see this go around how much he's willing to answer any questions around this spat between the Fed and those DOJ subpoenas and Powell releasing that video to come out and push back against it. I'll be curious if he takes off the gloves, so to speak, or if he goes back to his usual script and is very robot like in his responses.
Yeah, that's def. Look, I think. Do you think stuff like that has been contributing to dollar weakness?
Look, I think the dollar,
You
even
can't
though
quantify that. There's no way to actually quantify that.
you
You
can't
know.
quantify it, but I mean, the dollar is still the world's reserve currency. I mean, the dollar is the dominant means with which transactions take place, and any, the support, the the view of the dollar is supported by a couple things. One is the strength of our institutions. The other is the strength of our military. I think if you and given the size of our economy, relative to the rest of the world, I think the biggest risk right now is if you start to undermine confidence in our institutions. That is the single biggest risk to confidence in the dollar, so to speak.
Yeah, I saw this video. I don't remember where I saw it or who made it, but it was kind of funny and true. It's like you want to know what's backing the U.S. dollar, and they show like a bunch of U.S. warships.
An aircraft carrier, yeah,
Yeah, yeah, and all that. I'm like, yeah, that's what it is. That's 100% what it is, right?
yep.
So as long as that's the case, maybe the world is forced to look past some of Trump's antics, which are, I got to tell you, he's a made for TV guy, and it's kind of entertaining sometimes. Like when you saw Trump standing next to Powell with the hard hats, wasn't that? I don't know.
And going through the line item statement,
and and Powell's like a numbers guy, and like Trump completely didn't even look at the numbers, and Powell's like, "Well, hold on a second. Well, what about this and that?" Like right on live on the air. It was just fascinating. It was cringy. It was extremely cringy, but it
very
was just,
cringy.
yeah, it was funny though. It was definitely funny. So it's 9:15, 9:14. What are you looking at sector wise? You like
I
any?
Yeah. So the two things I would watch for. One thing I would specifically watch for today, and I would just say it comes back to the action in currency markets. What I would watch for today in the aftermath of Powell is if you had this failed dollar index breakdown. If you see an ongoing reversal higher in the dollar, that could be again the catalyst to send gold and silver lower and retrace at least some of these gains that it's had on the year. So that's very near term. That's one thing I would keep an eye on. Longer term, if I'm looking at any sectors, things that I'm bullish on, I've noticed recently there's been a kind of a broad move, and I'll call it the energy infrastructure space. So stocks, companies that are leveraged to building out energy infrastructure in some way, shape, or form, which obviously has been in the headlines a lot because of AI energy demand.
Yeah, I'm
Um,
very interested. I'm also very interested. So
Yeah.
which one?
Well, I like. I think GEV G Vernova is an interesting setup right here. Um,
GE, what's the ticker?
GEV
Hmm.
GEV. Power, power generation infrastructure is where they play at, and they've. I don't know if you're trying to pull up a chart, but they've.
Yeah,
If you're,
yeah, that chart looks nice.
yeah, I mean, it's been grinding sideways since about July. It tried to break out and it had a pullback, but it's just been chopping around that 695 level. So I would watch if we can get a breakout above that level if you're looking for more of a breakout momentum trade. And I bring them up, but again, like you've seen in various, again, call it energy infrastructure stocks, you've seen some relative strength show up recently. And I always take note when you see a broad move in an industry, when you see a number of stocks participating, that's telling you something. So I would, that's one name to keep an eye on in that sector.
Yeah, that's true. This chart looks like a little bit like Diamondback's chart as well, which I was looking at yesterday. Didn't pull the trigger on it, but I think a lot of these energy names kind of look similar. And if you're of the mind oil is not going below 60, this could, stocks like this could be interesting. Um, anything else? Anything else you're looking at?
No, those I think again. I think you can see a reversal in precious metals off the dollar, but then on the energy side, I like some of those infrastructure names.
Yeah, so I'm bullish on healthcare, but I'm very concerned about it. And one of the reasons I'm concerned about it is over the weekend on Bloomberg Radio, because I nerd out like that when I drive. I'll listen to Bloomberg Radio and sometimes sports radio, which is another nerd move, I guess. But XLV healthcare, and I'm hearing Cathie Wood on Bloomberg Radio, and I was like, oh my god, she has the exact same view on healthcare that I have, and that scares me, and that scares me a lot. Which is healthcare is going to be the sector where AI is actually going to help, like they're hit the ground running. An example of that, AI can read MRIs and X-rays even better in some instances than the experts already. Just as an example, there's drug delivery and all that stuff that you need data for. You need a lot of data for and all that stuff. So XLV is at. So the other thing that concerns me is, I'm not the only one noticing that this is the area to be in. And we're at that 50-day moving average, and I gotta, I'm in it, and I gotta start thinking, do I pare back a little bit? I did pare back a little bit yesterday, um, so that's a concern that I have. But I'm still bullish on it. I know Larry's not here; he would love this one, but I love this one. UFO. I love UFO space. I think that's a big ASTS Space Mobile is part of that. So I look at this one as an engine of growth. That's where, when you look at growth factors, I think that the stuff in this one is good. And here's one I'm really bearish on, which is Palantir. I've been talking about that one a lot. Um, this is another day where the net, you talk about relative performance. This is going to be another day. I don't know where Palantir is going to end up today, but the Nasdaq is up almost 1% on the day. It's another day where Palantir is not participating in that. This was like the poster child of bullish retail sentiment for the first half of last year, and it hasn't done anything in over 6 months. Um, I would say technically looks pretty weak. So I'm looking for a test of this yellow line, which is the long-term trend, the 200-day moving average. So that's what I got cooking pretty much.
Yeah, just on one other name I would point out too that's not keeping pace, but we've seen this really broad, it feels broad rally in semiconductors, but Nvidia is not participating. Nvidia is still,
Yeah,
I wouldn't say it's a bearish trend, but I mean it's not. It's just been
it's very
grinding sideways. But you've had this huge move in like look at SMH and Nvidia's going nowhere, which for an index investor that in the S&P 500 too that matters a lot.
that matters a lot. And looking at stocks like Palantir and Nvidia, which their charts actually look exactly the same, right? Pretty much, they've gone nowhere in the last 6 months. I'm just saying, if the market does something stupid today, which is go up like 60, 70 points after the Fed, I know like if they like I'm kind of like planning out a couple of scenarios, but I think I'm going to start loading up on some like start pricing in some like 68.50 puts like 2 months out or something. Take a much bigger kind of position short on the market. I'm not, I know the market's going up. I know it was bullish last year and stuff. I think this year's a little bit different, and I know the market is up, and I'm letting it be up. I'm not participating in this upside, and I'm okay with that. You don't have to participate in every move, right? You can kind of. So if the market's going to do something stupid today, I think I'm going to start planning planning some nice fat puts, 200 points out for like February or something like that. And we're going to have a lot of earnings tonight as well. So that's the other thing there. Like if you start planning out these scenarios and you have to kind of like, well, what's the reaction going to be? And because, if you saw what happened with ASML, we could get the same thing here. So let's see what the reaction is. But I'm kind of I'm trying to, like, I'm rooting for the market to go up because I think then it's going to be a sitting duck for when do we have seasonal bearishness in February, right? That's when
Yeah, the last 2 weeks of February are that might be the worst or second worst 2 week stretch of the year historically.
start planning, folks. That's all I got to say. All right. So you want to get the last word? Let us know what you
Yeah,
think.
I'll end with what I started with. Watch the dollar index today. Watch for it continue to build on this reversal higher, and if you get that near term, this could be your spot to look for a pullback in precious metals and have a more significant retracement of some of the gains we've had this year.
All right. Good luck, guys. Good luck there at the Opportunistic Trader. Let me know if you need help. Just give me a call. You guys know my number, right? So I wish everyone a great day. Thank you for joining us. Q&A with Larry tomorrow, and I guess I'll see you guys on Monday. Bye.
We